$131 billion, ranks 10th globally with 1.9% of global premiums. Life insurance holds the ninth position with $98 billion, while non-life ranks 14th with $33 billion. Private sector involvement, improved distribution, and operational efficiency have fueled its remarkable growth over 2 decades. However, India's developing market presents an opportunity, particularly in non-life insurance, to outpace global competitors. Predictions suggest it will rise to the 6th largest market by 2032. Factors such as young population, rising incomes, robust economic growth, digital technology, and regulatory measures support this growth trajectory. The IRDAI's vision of insurance for all by 2047 aims to boost penetration, ease of doing business, and investment attractiveness. With this background, the Bombay Chamber of Commerce and Industry is hosting this summit to delve into the challenges and opportunities associated with the insurance sector in India. The event seeks to explore highly pertinent risks, distribution models, and the role of technology in the industry, among others. I now request Mr. Sandeep Khosla, Director in General, Bombay Chamber, to deliver the welcome address.
Thanks, Utkarsh. Distinguished keynote speaker Shri B. Patnaik, Member Life, IRDAI, Ms. Alamelu TL, Principal Advisor, IFSCA, and former member, IRDAI, who is delivering the special address today, speakers, member of Bombay Chamber, board, respected guests. Thank you all for being here today for this interesting and very, very knowledgeable session which we are going to have in the next 2 hours, which is complete insurance. I'm thankful to Praveen Vashishtha, our chairperson of the insurance committee, who is the one who actually put it together with the help of Amit Roy from PwC. So thanks Amit and Amit's team for organizing this for us today. And to our partners, Shriram Life Insurance, India Insure, Medi Assist, and supporting partners, Unilite, Prudent, Insurance Deco, and Marsh India Insurance Brokers. A brief about the Bombay Chamber. We are just 188 years old. So in the next 13 days, we have our AGM, 188th AGM, and Bombay Chamber has been a pioneer in many, many firsts. In fact, the railway line in 1856 was because of the efforts of the Bombay Chamber, because the members then thought that this is very, very necessary, and appealed to the British government to ensure that this comes in. So we, from those days till now, we keep on looking at what is the industry's need, what are the areas which the industry should look at. There are these traditional areas like taxation and legal, which the chamber has always been a pioneer in. But in the recent past, we also look at what is the current trends which our members need to know about. So sustainability is a very, very big thing for us. Diversity and inclusion again is very big. Today, we have 3 conferences. We just finished a conference on governance in the morning, where Mr. Damodaran, the ex-SEBI chief, was the keynote speaker. And after this, at 7 o'clock in the evening, we have the Diversity and Inclusion Awards, where 75 of the who's who companies are participating, because this is something which is a need of the hour as far as Indian industry is concerned. So the chamber is always at the top of ensuring that each of these areas are what we look at our members to be completely in sync with. We present the awards, present our paper to the finance ministry to ensure when the budget comes out. There's a consultation which they have regularly with us. We do a lot of advocacy on behalf of our members. We also regularly interact with SEBI and RBI to ensure that whatever our concerns of our members are, or whatever paper comes from their side, to disseminate it for our members. So all those of you who are our members would know as to the activities we do. We did 106 such events last year, some smaller ones, some webinars, some training sessions, some site visits. So some people also went to big companies like Mahindra and Mahindra's plant, Johnson Johnson plant, or people who were in exports went to JNPT on a site visit organized by the Bombay Chamber. So if you're not a member till now, I would request you all, please become a member, help us in expanding the Chamber's activities among your employees, as well as contribute to whatever the member does. So with that, thank you all for being here today, and thank you sir and ma'am for coming all the way. Mr. Patnaik has come all the way from Hyderabad, and Madam has come from Chennai. So Bangalore. So to both of them, my special thanks. Over to you, Utkarsh.
Thank you so much, sir. I would like to welcome Mr. Praveen Vashishtha, former co-founder, Howden Insurance Brokers India and Chairman, Howden Asia, and member BFSI Committee, Bombay Chamber, who will set the theme for today's event. Over to you, sir.
Thank you, Utkarsh, and thank you, Sandeep. Shri Patnaik ji, Srimati Alamelu, Amit, distinguished guests, friends, ladies and gentlemen. Namaskar, and a very good afternoon to all of you. It gives me immense pleasure to extend a warm welcome to you at this insurance summit organized by Bombay Chambers. I will not overbelabor the point on size. Utkarsh has already shared some figures. Suffice to say that India is indeed one of the fastest growing insurance markets in the world. IRDA has gone on record to say that India will be the 6th largest insurance market by 2032, and I quote, leapfrogging Germany, Canada, Italy, and South Korea, unquote. Understandably, the growth outlook for India is based on strong economic growth, rising disposable incomes, a young population, increased risk awareness, digital transformation, and robust regulations. IRDA has taken up the mission of insurance for all by 2047. We at Bombay Chambers have taken the liberty of adopting this slogan as the thematic title of our insurance conclave, and we are thankful to IRDA for giving us this very nice aspiration, which we all buy into. The insurance sector in India has witnessed significant developments since opening up to the private participation in the end of 2000. As we approach 25 years since the opening up of the market, it is a good time to take stock. A lot has happened in the last 2 decades, and I'm sure there's a lot more in store. In general insurance, and many of us are from general insurance here, we have moved from the controlled era of tariffs and file and use of products to freedom in pricing of products and relative freedom in designing of products. In the life insurance sector, on the other hand, insurance plans were traditionally looked upon as the apt financial instrument to provide financial security to families in case of a policyholder's death. Indeed, life insurance plans are still known for the same benefits. However, life insurance has evolved to provide various monetary benefits, including savings, market-linked returns, retirement solutions, etc. Over the years, and I quote from Amit Roy's report here, insurance carriers have adopted several reforms in their operational processes that place the customer at the center of the insurance ecosystem. Simplification of policy wordings and standardization of terminology. Ease of getting serviced by insurers. Hassle-free claims intimation and processing are some of the key interventions which have led to an improvement in the customer's experience with respect to their insurance policies. On the distribution front, our insurance industry was largely dominated by offline channels like agents, offline brokers, or banks. Today, rapid digitization, product innovation and progressive regulations have made it possible for consumers to buy insurance through multiple distribution channels with the click of a button. As on date, there are more than 100 insurtech startups in India, and I believe I may be underestimating the number. Government initiatives, and there has been a slew of them, in areas such as health and crop insurance have led to significant expansion of insurance. Clearly, the insurance industry has witnessed an impressive growth over the last 2 decades, driven by greater private participation, improvement in distribution capabilities, deployment of technology, substantial improvements in operational efficiencies, and all this would not have been possible without supportive regulations. The impressive growth notwithstanding, there are a few challenges. Insurance penetration and density in India, as is well known, remain low. Our penetration stands at 4% compared to a global average of 7%, and density is $92 compared to a global average of $874. While the life insurance penetration in India at 3% compares favorably with the global average of 3%, the penetration of 1% in the non-life segment is rather low compared to the global average of 4%. Quite clearly, there's a huge opportunity here to catch up. Another challenge worth mentioning is the protection gap, and I speak about this a lot. By this, I mean the gap between economic losses and insured losses. Mr. Patnaik, 10 minutes ago, was speaking about the protection gap in life insurance. I will come to that, but for the time being, on the protection gap in natural catastrophes, India is increasingly exposed to many natural catastrophes, including earthquakes, floods, tropical cyclones, and wildfires. However, insurance protection against natural catastrophe risks is low. You'd be surprised to know that nearly 93% of the exposures are uninsured. That is the gap between economic losses and insured losses when it comes to natural catastrophes. Economic losses due to natural disasters have been on an upward trend in most countries, including India, for many reasons and for several years, driven mainly by economic growth and rapid urbanization. I mean, look at Bombay, for example, and such big cities. There is so much concentration of economic wealth in terms of assets here. One challenge in bridging the large protection gap is limited awareness and perception of risks. In this context, pardon me for saying it, the general insurance industry also faces challenges in underwriting. With a need for more granular data on existing natural catastrophe exposures and establishing more robust modeling capabilities. On the life insurance side as well, the protection gap in India continues to widen. And Amit, I once again take the liberty of quoting from your report. So this poses both a challenge and opportunity for the life insurance industry. As of financial year 2020, only 18% of the eligible population apparently subscribe to pure retail term offerings in life. And the protection penetration basis sum assured was at 12% approximately. This protection gap is expected to grow further at 4% per annum. As per Swiss Re Institute's estimates, the mortality protection gap in India alone stood at $40.4 billion in premium equivalent terms at the end of 2021. Further, on the life insurance side, there are still some issues that need to be addressed. For example, there is a need to raise awareness of credit life insurance amongst people, particularly in rural parts of the country. Sorry about that. According to Swiss Re, India's insurance sector is projected to record the fastest growth amongst the G20 countries, with the total premium expected to rise at an average rate of 7.1% in real terms. And I'm talking real terms. In absolute terms, the number is, of course, much higher, between 2024 to 28. This is well above the market averages projected by Swiss Re on a real growth basis. The global average projected at 2.4%, emerging markets average at 5.1%, and advanced economies average at 1.7%. Clearly, 7.1% towers above all these. So it's good news. In this time frame, life insurance business is expected to record 6.7% real growth, backed by rising demand for term life cover by the middle income group and increased adoption of insurtech. Meanwhile, the non-life segment is estimated to grow by 8.3%, primarily due to economic growth, improvement in distribution channels, government support, and a favorable regulatory environment. Health insurance premiums are forecast to rise by 9.7%, and we can understand why. There is so much underpenetration still there. So in my modest opinion, going ahead, we will see increased consolidation, hopefully more foreign capital, enhanced technology, big data, and increased capital market activity. We recently had a fairly successful IPO of GoDigit. So what will it take to achieve IRDA's mission of insurance for all by 2047? Is our ecosystem ready to efficiently manage the growth and complexities that come along with it? How will the industry manage emerging risks? How will the various distribution models shape up? What will be the role of technology in managing risks as well as handle effective and efficient distribution? Will robotic process automation and AI, which is so much talked about, occupy center stage in insurance? In this context, I must mention the millennials and the Gen Z who have disrupted many industries, and insurance is not an exception. This generation values connectivity and continuous access to information, thus demanding personalized experiences, transparency, and technology-driven solutions. So it'll be interesting to see this space and how the insurance industry as a whole responds to these aspirational expectations of Gen Z and the millennials. Eventually, and most importantly, how will the economy and consumers benefit, and how will the industry protect the interest of consumers? There is on the regulatory front already an enabling regulation to ensure that, but how will this all pan out? In short, how will we manage the journey of insuring Bharat? And I'm tempted to distinguish, not just insuring India, but Bharat. And for many of you, I hope you'll understand the difference between India and Bharat. Seemingly it is the same, but Bharat is the larger masses really in this context. So this summit is a humble attempt to take a serious look at these themes and concerns. We are delighted and privileged to have industry veterans, regulators such as Patnaik ji, former regulator Mrs. Alamelu amongst us, senior leaders, insurtech players, consultants, and chief risk officers in our midst today. With a number of erudite practitioners who are present today to share their thoughts with us, I'm sure and I hope we will have a stimulating discussion. Thank you for your attention. I hope you enjoy the conference. And Utkarsh, I hand over to you. Thank you.
Sir, just a moment. Thank you so much, sir. I now request our Director General, Mr. Khosla, to present a memento to Mr. Praveen Vashishtha as a token of appreciation. Thank you, sir. It is our privilege to have Mr. B. C. Patnaik, Member Life IRDAI, with us today to deliver the keynote address. Shri B. C. Patnaik assumed the charge of Member Life on 1st May 2023. Prior to his present assignment, he was the Managing Director of LIC India. He had joined LIC as a direct recruit officer in the year 1986 and successfully managed various challenging assignments in the states of Maharashtra, Gujarat, Uttar Pradesh, West Bengal, Odisha, and Jharkhand. During his postings as branch manager, senior divisional manager, and regional manager, he was immensely successful, impacting more than half of the country and a population aggregating to roughly 700 million or 70 crores. As Secretary General of the Council for Insurance, he ensured end-to-end digitalization starting from the lodgement of complaints to issuance of the final order, immensely benefiting the entire insurance industry as well as policyholders during COVID and continuing successfully thereafter. He has traversed the length and breadth of the country and has got wide experience in marketing, customer service, and technicalities related to regulation of the insurance industry. He is convinced that the growth of the economy in the country will be continuous and insurance in all its forms will be playing an inalienable role for the sustainability of the growth momentum. He is voracious orator and loves to keep himself abreast of the latest in finance and technology. During his stint in Central Office of LIC, he was involved in the implementation of LIC's e-services, and the same could play the role of a platform for enhanced digital services to the customers at present. As a part of the top management, he contributed his best to the successful of the listing of LIC in the stock exchanges. He is fully aligned with the goals and objectives of IRDAI for a transformative insurance industry in India, and he firmly believes that insurance for all by 2047 should be a reality. May I request Shri Patnaik to kindly deliver the keynote address.
Thank you, Utkarsh. I don't think I deserve so much of things that you've told. An humble insurance worker, and I'm happy everybody in this hall, they are wedded to the concept of insurance. And that gives me a lot of motivation to be here and to be of some value to all of you. So Mr. Sandeep Khoshla, the Secretary General of Bombay Chamber of Commerce, rather the oldest chamber of commerce in the country. And I think you, with a newfound avatar, concentrating on governance issues, ethical issues, 100% digitalization. And I think when I talk all of this, I feel IIDA is wedded to your concept. So thank you very much. I feel honored to be here. Madam Alamalu, my senior in IIDA, my boss when I was in Secretary General of Council of Insurance Ombudsman. And when I was talking about 100% digitalization, she was a prime force motivating us for this 100% digitalization. So it was one of the institutions at that point of time during COVID, when many of the institutions were struggling for digitalization. So there was entire grievance system was managed online, and today all orders and everything, they're generated online. So, and Mr. Amitra, Mr. Vashishtha, who gave a very nice piece. Okay, whenever he says about protection gap, all of us feel guilty here, including Mr. Vashishtha, including Mr. Roy, that perhaps we have not done our job. Mr. Mistry, who had a painstaking time with me last night, is smiling. So when we talk about insurance for all 2047, so I say, let us put it like that, mobile for all. And when I say, raise your hands, how many people have mobile, and I get my point. So without doubt, it's 100%. Now again I say, insurance for how many people have life insurance? Still it is not 100%, my God. Aapka nahi hai? So I think my topic ends here. You don't have a pension policy also, Vashishtha? So that, okay. So I'll put how many people have pension policies? Oh, okay, only half. How many people have health policies? There it is 100. So how many have property insurance, home policies? Of course, in India we have 1%, now here it is almost 10-15%. So how many have motor insurance? Here also you see people have motor, still they don't have insurance. So motor insurance is 50% only. Here it is 70%. So this is the state of affairs. So yes, insurance is something one has to believe in. It's the consciousness level. Of course, it has also to do with money, disposable money. India, we may say, has not become that rich as it is expected to be. So today, that means good thing has been done over the last many years. 25% of the population have been lifted from the poverty level. But again, for insurance, they have to part with some money, and I get my point. So they have to start earning money. So 2047, we call it Vikasit Bharat. The idea is that everybody in India will be self-sufficient. There will be 0% poverty. And as Indians, we should feel proud that we are all dreaming about it. Rather, we should all be dreaming about it. Of course, it is the government as the leader, we should be marshalling these thoughts, we should be spearheading these thoughts, and marshalling all resources, including us, all of us here. So when insurance for all we mean 2047, yes, I am an individual. Like I am BC Patnaik, I have a life insurance policy. I am covered with pensions. I have a health insurance policy. I have a motor insurance policy. Home I don't have, but because it is a flat, I am not staying, it is there only. When I go back to my own place, I should be having a home insurance policy. Maybe the society will be having some like that. I have not checked up. So still I have, out of this 20% is a gap for me also, the 80%. So 2047, we desire that everybody should be having that. When we see housing for all, what does it mean? All of us aspire to stay in a decent house. There is the minimum dignity that can be showered on any individual. Still, many of us here, maybe in Mumbai staying, we may not be succeeding to have our own house. To get a decent house, we may be staying 50 kilometers away. Decent transport, decent oxygen in the air, decent hygienic food outside. So these have all become rights. Yes, still the governments are capable enough to enshrine themselves these things as rights. There is an obligation on the part of the government and the society to ensure that somehow, through some mechanism, people have it. Okay, when we say health insurance, in India we say out of 140 crore people, about 70 to 80 crore people are now covered in health insurance. Ayushman Bharat itself covers around 50 crores of people. And all the group insurance schemes of the state government, the central government, the public sector institutions, and other things. We should say they have done a wonderful job. If you see over the last 5 years, around 2 lakh crores have been paid. Otherwise, these 2 lakh crores people would have been spending from their pockets, which you call OOP, out-of-pocket expenses. Maybe in India 5 years back, it was 80%. So it has reduced to 50%. Maybe 2047, we should expect that it should be 0%. These are called scientific way of living. So these are the concepts of insurance. Because when we get these opportunities, so one of the primary jobs of a regulator office is also to spread the message of insurance. Because we have the D in IRDA, that is called development. But people know us more for the R. Many insurance companies, they are here. So we are afraid of the R. But I'll tell you, because the primary purpose, because all of you know everything is there in public domain, we are constantly in the process of easing of regulations. But we have to regulate, you see. Because the insurance industry every year, it collects trillions of Indian rupees. So last year the collection was more than 11 lakh crores. So unless we regulate properly and something happens, you see, the industry cannot revive again in India, apart from all other problems that will occur. The assets under management, more than 60 lakh crores. So somebody has to regulate how these funds has to be invested, managed, the protocols and other things. Health, Suppose somebody takes a premium and doesn't pay the health claim. So it will be catastrophic. And if we go back to the history of economic offenses in India, we find that these are not new things. This has happened in India umpteen number of times. These are now happening in small pockets here and there. Worldwide, you get beautiful novels where these things happen. So the films are there also. So we are Indians, we all have a responsibility for India. We all have a responsibility for all the Indians which are not part of the insurance ecosystem but depend on us. We have to be one. So simply going by data, when I was telling, even the life insurance, you see COVID times, I can thank Madam Alamalu because they did a wonderful job, because people are not coming to office and all these things. They're designing new policies for the health sector, for the life insurance sector. And if you include those COVID times, and up till now, more than 2.5 lakh crores death claims have been paid. So you see the volume, hai na nahi? We have to count the zeros and how many things. So then only we can understand what is this concept of insurance. Yes, the government will do its role because government has a responsibility for 140 crore Indians. They will try to make acts. They'll try to give concessions by various tax breaks and other things to see that, yes, when people buy insurance, they get that comfort level. They feel that, yes, the government is with them also. Government supports that this is a laudable objective. This you are doing something good for the family. And when we say, we call it extended family also. In India, we are known for joint families. Something happens in one family, the entire joint family, it gets affected. Thus, immediate society, the bigger society, and so on, you can extend. The state, the country. Mr. Vashishtha was talking about the economic losses. Just think of the economic losses due to support of the ecosystem to that family. And had there been a scientific system where that family could have been protected, so that money plus this money could have been used for more productive purposes. People could have built houses, people who purchased cars. So all these are all known as economic activities. It's not a theory of between capitalist or socialist or something like that, because when a country has to be developed, it has to be developed on the foundations of economic activity. It also makes the government richer. When there are a lot of economic activities, government earns more than taxes. If you see the government of India taxes, it has almost doubled. And one of the reasons is the country is growing. We find a lot of houses being built, a lot of people going, eating out, a lot of things happening here and there. So, a lot of people buying cars. There may be people who may be telling, all this is promoting pollution, this thing, that thing, and all this. Those are also to some extent true. That can be mitigated at another level. But the growth of the country cannot stop. There is an entire future generation to take care of it. So I say that with support of each and everyone in this all who are part of the insurance, and I applaud your efforts, because I know personally many of you are working very, very hard. And working in insurance sector is not an easy job. It had never been an easy job 50 years back. It is not an easy job today. It will not be a easy job 50 years later. Carl is telling it's better to work in journalism and than to work in the insurance sector. So we are obliged from the regulatory office, we are obliged to all of you who work in the insurance sector. We know we are working hard. And we try to ease as many things as possible. I need not delve too much about it. Okay, I'll be reading out some things for the benefit of people who may not be knowing about it. But when we say this insurance for 2047, it's a dream of the country, it's a dream of the ecosystem in the country, dream of the people of the country, and which you have accepted as our dream. That in the year 2047, if the population is, let us say, 200 crores, which should not be expecting, but it will be on its own. So this 200 crore people, they'll be living in a very happy state of mind. They should be having adequate life insurance. Today we have life insurance, but there is a distinction whether it is adequate or inadequate. And again, when I ask to raise your hands whether you have adequate life insurance, I know only 5% will raise their hands. They'll say, yes, I have a life insurance policy. But 2047, we desire people should be having adequate life insurance. Like that, it happens in many developed countries. If something good is happening anywhere in the world, we accept it. If iPhones are good in USA, people say, no, I want an iPhone in India. People say, no, if the air conditioner is good in Europe or any other place, yes, in India it should also help us. And that is a learning for us. Some people learn from India. What is, if the Ayurvedic system of treatment is very good in India and people are happy, so people in US also accept it. They say, no, the yoga of India is very good. The meditation program in India, China, Nepal, wherever it is very good, we can accept it. But in India, what happens, we want to accept everything, but we don't want to accept the concept of insurance. So it is what you can call, it has become a part of our national character and engagement. If it is a question of insurance, we should avoid it. If it is a motor insurance, if I am paying the premium, I should ensure that what is the claim that I get it. If everybody pays premium and everybody gets the claim, so every year premium will rise only. One day it will be the cost of the car. People say if it is health insurance, no, why should I pay health insurance? If I pay health insurance, then I should get the money back. So insurance is a simple understanding all of us say here. It is for the happening of a contingency. That is a simple understanding. That is why in health insurance I am telling, let us promote deductibles, and I get my point. We find 80% of the claims are below 50,000. Even one board member of IIDA, he wanted some health insurance. So we enabled, he should be talking to some companies, he talked to some companies, and he, for himself and his wife, he went for a deductible only 1 lakh rupees. Of course, he was more than 60, but without any pre-existing diseases. And he got a 1.5 crore policy at less than 2 lakhs of rupees. For a 3-year term. So companies are ready, and I get my point. But where is the knowledge? So I can appeal Bombay Chamber of Commerce. Because we are discussing Mr. Khosla, Mr. Mistry, with everybody. I told Madam also, Gayatri. Because whatever time we get, we try to discuss. That if you have 3,000 firms working with you, whether there can be reality check, whether the employee is working there, whether they are covered adequately with insurance or not. PMJGBY, it gives you 2 lakhs insurance at only 436 rupees. Everybody has a bank account. The PM Suraksha Bima Yojana, a personal accident cover, it's only at 20 rupees. So we can work out many things. All the companies are there, they are very brilliant people. Wherever help of regulatory is needed, yes, we are ready. We are ready to take decisions within 24 hours. So that is the dream. So I can ask one question before I go to my papers, that whether we are all aligned to this concept or not. बहुत धीरे से सब बोलते हैं यार, कम से कम हाथ तो उठा दो. Because that is what, it is not a question of money. Yes, Vashishtha was telling this penetration amount, all these things will follow automatically. We have a model that we want all Indians to be covered, even if it is as low as 1 lakh rupees. Because for that family, that money is important. So I'll just take you, because we see when we say these claims and all these things, we take total claims, we paid around 30 lakhs crores of claims in the last 5 years. All claims together, motor, everything, general insurance and all. And when I say 30 lakhs, it has a meaning because the revenue of the government of India is 28 lakh crores. Of course, the expenditure is around 47 lakh crores because the revenue. So that means the insurance industry contributes that much to the society. And had the insurance industry not contributed the 28 lakh crore, then government revenue would have come down by 3-4 lakh crores. You are getting my point? Because that much money would have been out of pocket sort of thing. That much reduction would have happened in the general economic standards. And as a result, that much less taxation would have happened. So this is the power of insurance. And as a country, we have a long, long way to go. But time is short for us, so we have got a target, that 2047. Because you see, India was a great country at a certain point of time. The export revenues at a certain point of time were 23% of the global exports. You see all these beautiful houses which were built over the years and all, palaces, everything. That showed that it had money. People are fairly comfortable. People in their villages were producing goods which was being exported to different countries. They're happy with that village ecosystem, they're earning decent money, and they're remaining happily. Something happened somewhere, and things took a bad turn, and we became poor. In 1962, we did not have enough grains to feed our people. So, use and file I need not say. The insurance companies can launch these products without the prior approval of IRDAI. That means we have given all our powers to you. Then there are regulations. So we have compressed all those regulations to a total of around 20. And as far as these rural social sector obligations are concerned, here the unit of measurement will be renewal of insurance coverage to goods carrying vehicles, passenger carrying vehicles and tractors. That means earlier it was all clubbed into one. And one of the greatest casualties were happening in the rural areas. The obligations, many companies may feel that it's a burden on us, but I say it's a business opportunity. You go to any sector, yes, there are different stories. That rural area is depressed, something, this thing happening. But if you go to any FMCG companies, they are only ramping up their capacity in the rural areas. The sale of tractors there is an uptick month after month. But when it comes to insurance, you will find 90% are uninsured in the second year. So the Bima Sugam regulations are out. This is with an idea that, okay, apart from your companies, all stakeholders, customers, insurers, intermediaries, they can use it. It can promote transparency, efficiency, and collaboration across the value chain. And as far as the transfer of shares is concerned, 7 regulations have been consolidated into a single comprehensive framework. We seek to enhance the ease of doing business within the insurance industry, facilitating smoother operations and promoting overall sectoral growth. And main is now products. It has been liberalized to encourage the development of innovative insurance products which cater to the requirements of different segments, strata of the society, and provide wider choices while considering the interest of policyholders and maintaining regulatory compliance. The idea is a customer can design a product, and the insurance company will be helping him in co-designing it. So there will be a lot of engagement. Today we have vanilla products. We force the customers into it. I'm giving a small example. When I talk about just employing a deductible into the health insurance policies, it can widen the scope of health insurance. If in the individual space, in the group, there may not be much scope, but the individual space, if there are 2.5 crore policies, it can go to 12.5 crore policies. Because what I need, if I stay in a place like Mumbai and I get my part, for many of my diseases, I don't need a health insurance. The municipal hospitals are so good. But I may be needing a health insurance for some specialized treatments. But that somebody has to tell me what is the knowledge. Somebody has to make it affordable. So there we always say availability, affordability, accessibility. So availability is already there. Accessibility, we need to go. And there I find, I can appeal to all of you, that we have not succeeded to a great extent. Madam will agree with me, and I get my point. So, again, for the capital structure, insurance company, they say we need a lot of capital. So, okay, we say that we'll be adopting the risk-based capital framework, where capitals can be divided into separate segments. You can offload certain segment to a reinsurer, to other players. So your capital needs will be also less. Vashishtha can take a note. Even the supervision and other things, we are following the international benchmarks of the risk-based supervision framework, as opposed to the routinized way of inspecting the books and documents and all, which will be there, but it will be supplemented by the RBSF, so that there can be greater interactions about the risk factors, and it will be an ongoing process, because on the regulator side, we observe that this insurer will be facing certain risks on these patterns, but that is our job. So we can engage with them in a friendly manner throughout the year and try to see that those risks are eliminated. A message to all the CROs sitting here. So IFRS, when it is implemented, it has to be implemented because it's a government's initiative, and because many of our companies may also open offices in foreign jurisdictions. So they need to be compliant with IFRS. So we are enabling, that means we are trying to remove all the roadblocks in the implementation of IFRS, giving the companies a glide path to adapt to the IFRS. And I say that yes, it will be making our companies truly multinational, international. And Madam is also their advisor in IFSC. She knows the interest of insurance companies in getting registered with the IFSC authorities so that they can have access to the pool of potential in the international field. There are only 3 crores Indians, and I get my point. Just imagine, for them paying a premium of 1 lakh rupees for any line of business is not a very difficult thing. It can be 3 lakh crores. 50% of the premiums that today IID earns from all businesses, new businesses. Then renewal is another 4-5 lakh crores. So when I say the Indian market is so huge, the international market for Indian insurance companies is so huge. So where do we see ourselves? I say when a life insurance company is happy with an asset size of 50,000 crore, 1 lakh crore, I say perhaps in the next 10 years we'll be out of business. A health insurance company which is not able to ramp up its individual health insurance business, it will be always subject to shocks. A general insurance business, particularly motor and other things, when they don't go out to the field to find out where are the uninsured vehicles to whom we can engage, we are enabling them. We are telling them, you adopt a state, our state insurance plans. You talk to the government, we'll help you. You talk to the road transport authorities, we'll help you. Because somewhere something is getting lost. I'm telling you because there are road accidents and we face problems. Because at some places it is demanded that, okay, he has faced an accident, but the claim should be settled by the insurance company, even if the policy has lapsed or something like that. So why there should be issues, and I get my point. Why a vehicle should be moving in the on the roads without an insurance and causing hardships? Somebody has lost the family has lost the breadwinner for the entire future. Why it should happen? So this, we should be answering all these questions. We have done a lot of good job in the state insurance plans, like state level insurance committees, district level insurance committees, all of them been formed. People are working very hard. They are moving to all the states. So I can say from the IIDA, we have been doing a lot of things. We should be helping the insurance ecosystem. We'll continue to do all these things. And we are getting great successes in many of this because every year 1 lakh crore premium is added to the new business. That itself is a sign of good success. Every year 4 to 5 lakh crores get added to the assets, of course mainly contributed by the life insurance companies. That itself is showing signs of good growth. So they're continuing. 66 lakhs people are employed. Our goal is when it will be 1 crore, perhaps that is the day we'll celebrate that this is an industry which is giving employment to 1 crore of people. Roughly, let us say less than 1% of the population. So these are the opportunities. But the moot question is whether as a country we accept the philosophy or not. There are a lot of debates. So many people say, I don't understand anything about insurance for all. That somebody translated it, that in Hindi I say, insurance jaruri hai. So that is the concept, because it's an Indian philosophical concept. We don't do it, we have no other reason to have this concept. It is the love for India, love for Indians. We are the regulator created by Parliament. The people of India have shown their faith in the regulatory office. But in return, they desire you create an ecosystem where all of us can get insurance. Whether I'm staying in a rural area, hilly area, whatever be my income level, You design a policy for me. You don't just thrust a policy on me which I cannot afford. We want people to be co-creators. And in IIDA, we are ready to help it out. Thank you very much. Thank you for the patient hearing. I hope. Thanks all.
Thank you so much, sir, for such an illuminating address. Sir, just a moment. I now request our Director General, Mr. Sandeep Khosla, and Mr. Praveen Vashishtha, member BFSI committee, to kindly present a memento to the keynote speaker, Mr. B.C. Patnaik. Thank you so much. We will now proceed with the position paper launch by PwC on the topic Insurance for All by 2047, the role of distribution models, products, technology and ecosystem players. For that, I would like to call Mr. Vivek Velgavi, partner and leader, FinTech and Alliance and Ecosystem, PwC India.
Vashishtha, Bombay Chamber of Commerce, and Amit Roy from PwC for pulling all the content and knowledge together, and even including getting this gathering. I think when I was hearing Vashishtha speak and Patnaik speak, so much of the context has been really set. So my job here is, I'll keep it brief. My job here is, we're going to launch a paper. I'm going to give you an overview of the paper. As I was listening to a lot of objectives that we wish to achieve, in my mind, and the example given was equating insurance to a mobile phone. It takes a whole village to really arrive at that point. It requires a lot of enablement. Of course, like the policy makers do play an important role. Industry plays an important role. Technology plays an important role. So what we attempted to do in this paper is really set the ambition. We want to insurance for all by 47. So what will that entail? Where are the business trends? So that is one aspect of what we have covered, what the landscape look like. But more importantly, in my mind, this is not a new problem. This problem has been there for a while. Of course, we have made progress. For us to make further progress, we have to understand that doing the same things again and again maybe probably will not lead to that success, right? So we'll have to look at what are the emerging business models? What are the emerging ecosystems? What are the emerging strategies? What's the reason why insurance is not getting adopted? Is it just the awareness? Is it profitability? Is it last mile access? And how can those get sorted or solved by using some of the technology or emerging models which have come to fore? And that's where we have spent a fair bit of time in looking at the evolving landscape of insurance as well as the emerging distribution models. Now, if we look at some of the, and most of the folks here are really practitioners, so I would be pitching to the choir, you would know these numbers. But if you look at the growth of insurance in last few years, few trends are quite apparent. The growth in health is very apparent. Like even we did a straw poll in this room, the growth of health has been superseding many other products that we have seen in the market. The use of technology has been big. Vashishtha called out, we're going to become the 6th largest insurance market globally, which is a big growth. So effectively, the trends are positive, the market is big. The question is, how can we move further into growing around it? One factor among many, which has really caused a fair bit of growth in recent times, has been proliferation of insurtechs. And insurtechs, both from a startup perspective, coming in, the likes of ACO and others who have really set up a new business in the country, but also from existing insurers, whether it's life or general, and how they've used technology for both assisted as well as direct selling has made a big impact. The curious fact is, there was a big spurt you would have seen in the funding around 2021, which has really tapered down. But what has really changed is two things. One, that funding was kind of bulky funding around few ideas, and some of those ideas take time for them to get rolled out. The funding was behind saying, can you really create a digital first insurance company from scratch, from underwriting to everything? Like that's where the big funding really went, and it will take a couple of years for that whole story to play out. But the exciting thing for us that we've observed is in recent times, while the overall the value of funding has come down, the funding is now going into Series A and Series B, which are like between 5 to 10 million, into many other players. So number of companies getting funded has really increased in that period, which is quite encouraging. It is showing new experiments being done and the wide experiments being done. Now, where is this new business or new way of doing insurance evolving? Now, there are two key dimensions. One dimension is emerging business models themselves, and the other dimension is using of different insurtech technologies across different parts of the value chain. So if I look at the emerging business models, usage-based insurance is one. Embedded insurance, because many times the issue is really in one trying to sell insurance or going all the way to do insurance, but if it is embedded into the risk journey, the clearest, easiest example is travel insurance, or when we spoke about home insurance, because it is embedded seamlessly into the core asset buying journey, and hence no one really sells it. It really gets sold as part of that journey. And as more and more parts of our lives are getting digitized, and we spoke about rural, in rural so much of procurement is now getting digitized. Insurance, if it gets bundled with it, it can go a long way. The last is also bite-sized insurance, and clearly the government schemes are one example of it. But digitally as well, to get into 20 rupees, 50 rupees, 100 rupees kind of an insurance policies do improve the effectiveness of adoption. And also technology makes it possible for us to distribute them at very low cost, so that it's not a non-profitable business to do it. The second aspect is also quite curious on where the technologies have been used. Now we know that in financial services more broadly, and insurance in particular has been early adopter of technology. Like we have had policy administration systems from get-go, so to speak. However, there are many other parts of the insurance value chain, whether that was in product design, underwriting, customer onboarding, claims. So if I look at some of the most recent funding which has happened, the big area for it has been around claims, employee engagement risk. So those are the different parts of the value chain where new kind of products or solutions are now being available, allowing for, so if today I had to create an insurance company from scratch, I could cobble together many of these parts, come together in a low-cost manner, maybe do it as on a service basis, and then really launch my product. So those are the few, and this is just a snapshot view. The much more details are in the report, but kind of giving you a sneak preview of the dimensions we have covered. In terms of evolving distribution models, the reason we would want to do it, what are the key drivers? One driver has been innovation, exploring new customer segments. Because if you really want to get insurance for all, there are some customer segments which are newer customer segments which are evolving, or could be in rural, could be in urban, could be the gig economy, could be the whole startup ecosystem, could be the SME ecosystem, where for many different reasons they have been not included. Sometimes the product has not been designed, sometimes the access has not been there. So kind of getting into those segments has been a key driver for it. Lastly, one value-added services, right? So there is one perception that we will take, of course, insurance to cover our risk and contingency. But the expectations or the needs are really evolving. The needs are no longer to say, just cover my cost. The needs are evolving to say, help me get better. Like if you're giving me a health insurance, solve for the broader story. See that, my health become better? How can you give me access to allied services? So then that's the trend that we would see, where it will move from just payout to convenience to kind of holistic management of whichever area of risk that we intend to cover. Now from a distribution model perspective, there are 4 key thematics that we have kind of carved out. One is around last mile customer acquisition. It's a distribution business. For a long time, we were really an agent and still continue to be an agency-led model. But as we want to get to the last mile, the thought process is the last mile customer, what else is the customer using? If my customer is an agri customer, are they using an agri platform? If my customer is a gig customer, are they using a gig economy platform? If they're using any of those platforms, then it is better for me to partner with those platforms and reach out to them, right? So that partnership is a key aspect there. Similar perspective comes in B2B2C. If I go and target, and one of the data was telling us that a group insurance is one of the highest growth areas. But even without taking a group, can a business itself be a channel? Right? If you go to an MSME is holding 50, 100, 200 employees or workers. Can that be a channel, and can that be a win-win? The workers are safe, the workers are covered for their health, it is better for the MSME, right? Is that a channel to be considered? So B2B2C is another distribution model, which is again not new, because employee-based, when you're targeting companies and their employees, it was very well understood in the industry, except now that can be taken to the next and more lumpier part of businesses. Third is rise of, the third and fourth in my view are similar-ish, is embedded insurance, with the examples we already spoke of. And the fourth is contextual. There are many times micro niches where folks are not covered, right? So for example, in certain time period, dengue increases, right? So is that a part to cover? If people are driving more cycles, is that an area to get covered? So those are kind of product or need niches where we are seeing new products or new companies coming into fray. So that's the kind of a brief overview of what we had. We will be launching the report soon. Everyone should have copies as well. So go through it, enjoy it. Amit is here. A lot of our team members are here from PwC. We are here to have more conversations with you. Thank you so much.
Thank you so much, sir. I would like to call Mr. Amit Roy and Mr. Vivek Bilgavi to please join us on the dais for the paper launch. I would like to call Mrs. Alamelu ma'am on the stage to please join us for the paper launch. Thank you so much, everyone. We will now proceed with first panel discussion. This is on the topic Insurance for All by 2047, Role of Distribution Models, Products, Technology, and Ecosystem Players. For this, I invite our moderator, Mr. Amit Roy, Partner and Leader, Insurance and Allied Businesses, PwC India, and our panelists, Mr. K.V. Deepu, Senior President, Bajaj Allianz General Insurance, Mr. Rajiv Gupta, President, Policy Bazaar Fintech Limited, Ms. Priya Deshmukh, Head, Health Products, Operations and Services, ICICI Lombard, and Mr. Jayamit Doshi, Chief Technology, Digital and Direct Marketing Officer, Aditya Birla Sun Life Insurance, to kindly join us on the dais. Sir, just a small request. As we have the DEI awards function immediately after this event, requesting you all to kindly adhere to the time.
Thank you. Utkarsha. I think till the time we find out whether Jayamit could make it in spite of Mumbai traffic, let me start with a reflection that I had after I heard all the speakers talking about insurance for all 2047, and this is a passion that we all have. And I am actually reminded of a childhood story. I am born and brought up in a small town of Jharkhand, and in those days, a lot of forest out there. And I don't know how many of you would have seen a forest fire. It looks to a child pretty engaging, but also I used to get afraid. And I would go and tell my nani, kuch karo, wo forest fire band ho jaye. And she would tell me that, don't worry, Amit, it's something which is not exactly fire. It's actually a garland of God. And you just sleep off. By morning, God will lift up the garland and, the fire will be gone. And every day it used to happen like that, particularly during summer season. The reason that I am saying this is, I used to ask her that I'll actually remain awake one day and I'll see that when God lifts the garland and how does the fire go. And she said, if you can do that, then on that particular day, whatever you wish will be granted. I still recall in my childhood days, I wished something which got granted, and I did not see God uplifting the fire, but I still recall it was the Devi Paksh day and we are watching one of the World Cup match. By chance I went up and I don't know whether you have seen forest fire gets doused just like that. If today I have to wish something, after seeing God lifting the garland, I'll possibly ask for insurance for all by 2047. I think with that I wanted to start this. We always talk about insurance, we talk about accessibility and affordability. That brings to my mind the first question, and Priya to you, because health insurance everyone's talking and probably you are the expert out here. In terms of affordability, health continues to be a market where we get very cheap insurance coverage out here in India. However, in terms of the claim settlement, which happens, it's not really a great commentary, but we still pay a lot of claims, like Mr. Patnaik pointed out. And in spite of doing all that, India is not a profit-making health insurance market. So while insurance for all happens and health coverage for all happens, what's the story for future? Anything different that you all are planning to do?
Well, first and foremost, thank you, Bombay Chambers and Amit and PwC for having us over, and fantastic prelude by Sir, and the initial discussion as well as the presentation. It's amazing. When you talk about insurance for all by 2047, it's a very big, target. And it's very inspiring because, it's not just a vision, mission, but it is actually hinging upon the fact that, there'll be certainty, there'll be assurance across the different pillars of insurance, and taking away the fear from the, lives of people. That really is the context. Amit spoke about a story. I would like to really talk about my story. As an individual, it is not by fluke that I'm in insurance, and especially in health insurance. All my 27 years, out of 27 years, 25 years in healthcare and health insurance, because it's a passion to help people. And what better field than, health and healthcare.
Of course.
Now, talking about this piece, when you talk about health insurance, why the penetration is low? A, awareness, COVID has really propelled it. B, trust deficit because of the challenges that, you spoke about, and I'll delve into it a little bit more as we go ahead. And of course, this feeling that, if at all something happens, I'll take care of my family and myself with the earnings that I have. And we invest in the best car that we want, the biggest house that is possible, and all the assets. But we do not realize that if at all tomorrow, God forbid, any eventuality were to strike us, all of that will be wiped off. And that's what we heard one of the speakers talk about. People wipe off all their life earnings and savings if at all an emergency or any kind of kind of a event happens in the life. Now talking, and fast forward 2047 and hinging upon the question that we ended up paying a lot of claims, and one of the examples is pandemic. None of the insurers could have, the never expected event had priced for it, but it was an emergency, it was a national calamity, and all of us rose up to the situation and, faced waged the war against COVID and paid enormous amount of claims. If you look at the model of insurance, the health inflation is continuously increasing. We right now are in the era of hyperinflation, double-digit 14% upwards, which is way, way higher than the national inflation rate. Now, how do you really balance the cost of acquisition, the distribution cost?
Yeah.
Because, digital, as all of us would like, consumers would not buy something digitally as they Swiggy it or they Zepto it and, Amazons of the world, because insurance is still a matter, of, good faith. It's just a A4 size paper, it's a promise. You don't get a tangible product, so to say. So it is going to be advisory, and we've seen elsewhere in the world as well, while the digital propel has happened, still it is assisted, still it is the humanizing element in, especially in health insurance. So, huge amount of changes in the regulatory aspect. The Master Circular has come, as we all know, and one of our speakers spoke about it. All of those changes that the regulator is making is pro-customers, and we as an industry completely support. Some of those are going to be painstaking, difficult. We will, kind of crib and cry, but ultimately we're going to fall in line because all of us are working towards the end customer and end consumer. Making profits. Insurance, especially health insurance, is a long tail.
Yeah.
It's a combination of whom are you selling, what are you selling, how are you selling, and how well do you understand the risk. A combination of all of those is going to really hinge upon profitability. Predicting the health risk and analytics and predictive data analytics and driven products, sachet products, need-based products, those are the ways forward to really achieve the mission at the same time, because all of us are not-for-profit. We want to make profit at some point, and we want to be sustainable industry to support our long-term prospects as well as the consumers. So I would say a combination of the products that are getting created, the service solutions, the medium in which, insurance is being sold, awareness, and talking about the combination in terms of prime city, because the penetration in the rural masses and the missing middle is the real answer, because insurance is basically a combination or rationale of the top line. So as the top line explodes, which is what is the vision, the other ratios are going to fall shorter and shorter, smaller, and thereby creating profit pools for all of us.
I'm so glad you mentioned that. And one of the critical elements is obviously to increase the coverage, and no two ways for it, but then grow distribution. And with distribution, Deepu, I wanted, because couple of days back I put it up on the LinkedIn that with Bombay Chamber of Commerce, typically I put it on LinkedIn asking for people for questions, in case something, because I have very experienced leaders who are actually running the business. Here only as a moderator I am moderately learned, but these people are really, really learned. So they wanted answer on distribution. People are still saying that distribution is costly, and there's an expense of management, and distribution cost is going down, and everybody talks about digital insurance, but the reality, they say that digital insurance is not really taking on. Now on distribution, do you sense that there could be a marriage in between a phygital and digital kind of this thing, and we come up with something which is really tangible? And the point that Priya mentioned, you need to have a critical number, to make profit. Profit cannot be done with the first policy sale. Do you think industry is on the right track on that? Do you see new channels evolving and stuff like that?
I think it's a good question. Firstly, good afternoon, everybody. One thing we need to understand about insurance is that if you look at a customer...
Is Deepu audible?
Audible? Yeah. Okay. So, when as a customer, when you wake up in the morning, you don't think of a bad day, right? You don't wake up thinking I'm going to have an accident or I'm going to go to the hospital, right? You think you'll have a good day. Therefore, insurance needs to be sold to customers, and we call it a conversational sale. When you interact with customers, you need to tell them that you could have a rainy day, right? Depending on your longevity, are you adequately covered? Which is where distribution comes into play, because it's a push product. So that's why you have a huge range of distributors, and this is a global phenomenon, not just in India. So whether it's banks, whether it's agents, brokers, e-commerce players, you have all forms of distribution. So insurance is a push product, it's not a pull product, and that's why distribution plays a role. Agreed. Now when we talk about digitization, what digital transformation does is, it does not replace distribution channels, but it enables distribution channels.
Absolutely.
Therefore, you can make the buying process, easier, you can make it paperless, so on and so forth. And to your point around new channels, definitely new channels have come into play. For example, you didn't have, e-commerce players, some years ago. Now they are actively selling insurance, and they can sell a huge amount of policies in a matter of seconds. When they sell millions of mobiles in a matter of seconds, we can sell, mobile cover, right, in a matter of seconds. So the forms of distribution are evolving, but, distribution will continue to play even in the foreseeable future. And as we get digital, it's only about enabling the process, but it's not about replacing distributors.
Following up to that, Deepu, if I am allowed to ask on this, that there seems to be a little hesitation in saying that, I distribute, so I charge you some money, right? Unlike a doctor or unlike a chartered accountant or any professional, if I am selling, I am supposed to sell insurance at my cost and possibly even pay some of the premium that you are paying, right? That is the kind of approach. In some way, distributors are a little defensive, talking about commission, and there was a proposal on disclosure of commission, then there was rara all over the industry, and including all of us supported that, saying, hey guys, you can't do that, kind of a thing. Where is the defense? I mean, is there something that we can do where people can actually legitimately ask for distribution charges, because it's a very technical product, right? And it's a very service-intensive product at that also. Do you think anything that can be done, or as industry we can make some awareness campaign around distribution charges? It's not bad.
See, I think, you touched upon some, some very
Sensitive,
core issues, right?
Yeah.
Across the insurance landscape. See, transparency, whether it is for the distributor or whether it is for the player, as in the insurance provider, or whether it is the customer, is something which is always welcome, right? Because transparency ensures higher trust. And as we all know and we discussed, insurance is a matter of trust, right? Because, for example, if I buy this bottle of water, right, I'm going to consume it right now. But when I buy insurance, I don't consume it right now. It's one product which you consume in the future, and sometimes you may not consume at all. You may buy a motor insurance policy, and if you've never had an accident or never had a claim, right, you're never availed of the service, so to speak. So what you're selling is a promise, right? A promise that when you are in trouble, we'll come to your aid, right? Yeah. And sometimes, despite what we hear, right, I think we need to understand that the industry's combined ratio is in excess of 100, right? It's close to 120, which means for every 100 rupees that we earn, we are spending 120 rupees, out of which the highest component is claims. So we should not forget that, right? That the insurance industry does come to the aid of customers. But coming back to a point around distribution, I think transparency across the board is something which, as a principle, we will all always welcome. And I think it just needs everybody to get their hands on the deck. It's a complex one because you've got multiple players, right? And like you've seen in the case of blockchain, right? To get everyone together needs a lot of effort.
That's a great one. I mean, I couldn't have thought of handling it in a better way. You said all and you still covered well. Coming to you, Rajiv, in terms of, I mean, Rajiv comes from Policy Bazaar background. Before that, Rajiv comes from distribution background, bank background, and what not. You know the Indian consumer very well, right, Rajiv? And everybody is talking about ecosystem. Everybody is talking about, digital. What do they call it? A netizen, right? And we are talking about digital insurance and all of that. People say that if it is digital, it has to be Gen Z, because people above 50, 60, they'll possibly go for conventional agency and all of that. I was talking to someone, who is a promoter of one of the gaming companies. And lo and behold, he was saying that in gaming industry, 60% of the customer are actually so-called senior citizens or mature citizens, experienced people as they say, and they play Ludo, Now there, the digital stuff is really catching up. When it comes to insurance, they say one has to be Gen Z to be a digital customer. So your thoughts on that, Rajiv? Do you see, sitting at Policy Bazaar, Bank Bazaar and all of that, digital ecosystem, do you see the age, going up? Do you see that your site is getting accessed by the so-called senior citizen group also?
So firstly, I think it's not easy to draw a parallel between playing Ludo and buying insurance. But, obviously a lot of senior citizens you'll find in the clubs playing cards.
Yeah.
But coming to digital insurance, I think
The point that I was trying to make is that for playing Ludo, they are going digital.
Sure.
They are gambling. They are actually, they are actually trying to get money by paying money.
Sure. So I think basically, Amit, what happens is digital insurance over the last decade has made big inroads. If you look at Policy Bazaar today, one of the companies PB FinTech manages is Policy Bazaar. Our annual run rate on insurance today is about 20,000 crores.
Wow.
Now, that is considerably big if you look at the size of the insurance industry today. And if you look at the market, obviously we were present in tier 1 cities when we started. We were purely an online company offering comparison and then people bought our products.
Sure.
But as mentioned by the previous speakers, we also realized that India is still, a physical country, so where a lot of segment still wants a physical presence. So we started an offline phygital model, let me put it that way. We run a phygital model very actively. So of the 20,000 crores, I think 25% still comes from the phygital model. While 75% or 80% continues to be an online model. And the age group, honestly, if you really ask me, in tier 1 cities, we don't face the challenge of elders not buying from us. Now, how do we define elders? If you ask me 60 plus, I would say no. But if you ask me 45 to 60, there is a significant number of customers who have bought policies from us.
That's growing.
Yes.
Wow.
Now, coming to tier 2, tier 3 cities. Now, where you have high mobile penetration, internet access, playing games doesn't require intelligence. I think what we really now need to do over the next decade is how do we create financial literacy in tier 2, tier 3 cities, making people realize why insurance is important. As the previous speaker said, or as member IID said, today the challenge is people don't know why insurance has to be bought. And if they don't buy insurance, what will happen to them? Even today, I think the numbers keep changing. When we looked at data, we find 65% of the healthcare expenditure still come out of pocket. Now that means throwing substantial number of people, into poverty line. Now, what will happen if the government has to bring them back from the poverty line? Look at the expenditure the government has to incur, to bring them back. And that is why getting into tier 2, tier 3 cities, building a phygital model in partnership with the insurers and with the government is crucial if we have to have insurance for all by 2047. The other part is, are we all realizing that today 10% of India's population is senior citizens? When I say senior citizens, 60 and above. 2050, the target which we have, we will have more than 20% of India's population, which is about 35 crores people in senior citizens. And of this, 40%, 50% people will not have any income at all. So how do we tackle that problem which is going to hit us hard? So while we're going to build insurance for all, while we are focusing on tier 1, tier 2, tier 3 cities, at some point of time, this senior citizen population will exceed 0 to 14 years. In the next 25 years. So that's the challenge which we'll all have to realize on how do we build products which can cater to these guys? How can government partner with the insurers, create tax incentives, create subsidies for us to reach out to those pockets? While there are a lot of good schemes, as Patnaik sir mentioned about Pradhan Mantri Yojana, you have a lot of schemes which cater to, the poor people. But even then, I think these are problems which we need to address over the next few years if we really are going to target insurance for all by 2047.
I am so glad that you brought it up, and I recall Mr. Patnaik was saying that two things. A is that, one has to understand that this is something which is here and now. It's not like insurance for all will happen 2047, so 2046 we are sorted, nothing needs to be done. Suddenly 2047 everybody would get insured. It cannot happen like that.
And just to add, we spoke about trust deficit.
Yeah.
Now to address that, what Policy Bazaar has done is we have opened offline claim support in about 127 cities where physically our people are present to assist people who need a claim support when they go to the hospital. Because that will help
the trust deficit to be addressed.
Great, great. But Priya, fundamentally, coming on this trust issue, and I'm not only talking about insurance for health or life, or generally, insurance as an industry lacks trust. And generally people think that, nothing wrong in this, that people in India, they are fatalistic. We believe in God, so God will take care. My mom's and dad's blessings will take care. But how do we actually infuse trust, and not at the end of the funnel, but on the beginning of the funnel? Are there some thoughts on trust?
No, sure. So, before answering that, just to supplement or add on to what Rajiv mentioned and Deepu also mentioned, talking about the age segments and adoption of digital, we see a little bit of a inverted pyramid in other industries. And why are we really thinking about insurance being so complex? So answer really is, are we making enough efforts to create simplified products? Number one. Number two, are we making efforts to explain those benefits and those product structures to the end consumers for them to believe that it would help them in the longer run? Again, coming back to the trust aspect. Now, you buy something and 100% of whatever expenses are covered, you would never have any trust issues. If you have asterisks, you have certain aspects which are not covered, that would deal into, I thought I understood my product to cover everything, and now I have to pay, say, non-medical expenses to a range of 6-7%, for example. So that's really, causing this asymmetry of information, or understanding versus reality and actuality, and so on and so forth. So I guess, having said that, all of us across all our peer groups, and I can talk about ICICI Lombard as well, we have been making a lot of effort in being at the forefront, creating those products which are absolutely transparently clarifying on what is covered, what is not covered. And the regulator, took a step of creating the CIS, the information sheet, as well as the key features document, which will then help the customer to understand that what is covered, what is not covered. But more importantly, what is the consumer needing as part of those features, and do they really need it when it really matters? That reflection is needed for all of us to, face. And second of all, create those products and try and, solve the problems, as Rajiv was mentioning. And when there is a moment of truth, which is at the time of claim, and we're focusing, overtly on only inpatient claims, but now insurance products cover a lot of fit care, a lot of OPD aspect, and we see that translating into lesser OPD, expenses, out-of-pocket expenses for OPD and other wellness care. So all of those aspects have to, be kept into perspective, and supporting the customer at the need of time when he or she really goes through that event is very, very critical. Now, trust deficit, specifically, it's only by leading from the front and supporting from behind. It has to be done both at one go, and the industry has to come together, to communicate, what are the statistics, what are the numbers, what are the number of events, incidences, and how much are we supporting.
Correct.
B, if at all there are rejections, what are the reasons for those rejections? So, because only then the larger population will understand. C, creating awareness. There was a discussion at one point, coming up with a common pool of investment across the insurance industry to really educate the customers, like mutual fund, for example, on what are the risks, what are the, pros and cons, what are the enough number of measures to be taken. And also I want to highlight the fact is, having insurance only is not important. Having enough coverage of insurance of various classes is also very, very critical. And the moment, as an insurance company or as a distributor, we're talking about phygital, and that's a matter of great discussion and debate. But as a responsible professional, whether you're selling, whether you're creating products, whether you're risk managers, are you doing it just to garner revenue, or are you doing it because you are responsible enough as a corporate, as an individual towards that last person? That's really, going to define the future on how this asymmetry is bridged. But I would say it is heralded, a lot of efforts from the regulator, a lot of efforts from knowledge partners like PwC and many others, which would really help us bridge that gap.
I think that's a great one. And coming to you, Dipu, with the point, I think somewhere in the paper, Vivek Belgavi also mentioned that we kind of tried touching, that if insurance for all has to happen, then actually all have to make the effort grounds up, right? Now, so far only 60 odd companies, regulator, some of the knowledge partners, firms like PwC, we all are talking about insurance. When you really see that, let's say, like MSME as a model, or users start talking about insurance with the conviction, how do we bring in that, moment of truth for the industry? Do you see any possibility with, new government 3.2 coming over? I actually see that insurance gets a little neglected. I do not know whether you call it a little sensitive, controversial question, could be. But housing was touched, insurance was not.
I think one thing since you spoke about the government, can you hear me? Okay.
Yeah.
I think one thing which we were very pleased to see as an industry is, if you looked at the poll promises of many many political groups in state and central government elections were about offering insurance to all. It was a great thing, because we saw that as a poll stop, right? People in many states were saying, we'll give universal health coverage. So, it's good to see that, because when the government gets into the distribution game, it can be exponential, right?
Great.
Any other, private player. So I think that's point number one. Point number two, when we're talking about insurance for all, right? I think we need to understand that we have a long, long way to go, in terms of distribution, right? Bangladesh, for instance, right? Far smaller nation, they have more insurance companies. We have around 60 insurance companies, right? The US has 6,100 plus insurance companies. So we just, pittance, right? We just need to dramatically increase, the penetration. That way the regulator has played a great role. They've basically taken out, state-wise targets, given it to various players so that players can focus on states and bring it up. The other is we also need to look at, how do we evolve, and expand the scope of insurance, right? Because if you talk about insurance, typically you talk about motor insurance, health insurance, property insurance, agriculture insurance, but you have to expand the scope of insurance. So for example, recently when we saw that there were a lot of, double income, no kids couples, right? And they were having pets, we launched pet insurance, right? There are players offering spectacles insurance. So, how do you expand the scope of insurance? And even within insurance, how do you vary? For example, when we had COVID and we had a hybrid model, people were not taking out their cars every day to office. Yeah. They said, why do we need to pay premium for 365 days? So we came out with the pay-as-you-go model, right? The extent to which you take out your car, you pay for it. So I think if you can come out like that, if you can customize it, and if you can expand the scope of insurance, and if you can take insurance to every household by dramatically increasing penetration, then, we are in the game. But right now, I think we have, all these efforts need to come together, right? It's good that we're thinking about this, but like, we keep typically saying, right? The devil lies in the details. So I think a lot of execution across the ground, and it requires concerted effort from everybody across the ecosystem.
Great, great. And Rajiv, coming to you on a related topic, people talk about affordable housing, okay, and there's so much of subsidies available, these, that, government measures are there. People talk about affordable insurance means micro insurance, and that's not the key, right? That's just one of the things. So your thoughts on affordable insurance, do you think that there's enough policy support on that? Do you see that there's some role that government can play? Because ultimately insurance for all has to be affordable, right? Think of a 5,000 population village, people do not understand, and I think during lunch, we are discussing about a place like that where most of the people have, kids should have left, no one is farming, only elders are there, and people do not even know that something like health insurance exists, or health facilities are not there. So what about affordable insurance in your mind?
So I think affordable insurance for major cities and major towns is very different from affordable insurance for the segment you're talking about, tier 3, tier 4. So if you ask government support today, I think the government support for the insurance industry is in different forms. You have various, yojanas which is taking care of people below poverty line. But at the same time, you don't have enough support to cater to people who are lower middle class. I think in tier 3, tier 4 cities, you will need, insurance plans which are far more affordable. You can't sell the same health insurance plan which probably you sell to tier 1, tier 2 cities.
Correct.
So what does it mean? It means, as Deepu said, customizing products for that segment. So when you customize products, you have to keep various factors in mind. Obviously, the insurer will look at its own cost, the claim ratios, the distribution will look at what is the cost of distribution. The government is looking at its revenue. Look at GST today. GST for insurance is at the highest. Now, which in my opinion is also substantially contributing to increased premiums.
Right.
So somewhere I think we are working with the government closely over the next few years, but somewhere this realization of bringing down GST or virtually charging no GST for health insurance or for protection insurance becomes a reality. I mean, it's a combined effort of the insurer, the distributor. Now, the distributor again, if he's going to set up offices in those places, is going to be an expensive model. Now, I spoke to somebody in the NBFC segment. What they have done is, they have appointed people within the same village and trained him to talk about, what is loans, what is interest rates. From 40-50% interest rates which the guys were paying to the money lenders there, today good NBFCs who have positioned themselves as, NBFCs serving the tier 3, tier 4 segment are able to lend money at half the rate, not necessarily at the rate at which the interest rate is available in cities. Similarly, for insurance, we'll have to identify people in those villages, train them. I mean, train the training model, train these guys, and use digitization to complete the process. So which means a mix of phygital model where you have local guys who can influence people, who can educate people. For that, we need to identify these guys and educate them, particularly women. I think a lot of women play an extremely good role for NBFCs, which I understand. I guess this will certainly help us, to improve penetration, to bring down cost, and come out with products which will suit there. And trust me, once products are there, once the trust factor is built, once the literacy, I mean, the most important factor is the literacy is built, I think this target of insurance for all is eminently achievable.
So Bima Sugam, like Patnaik sir also spoke about, it's getting inaugurated. Very soon it will get launched. So the real UPI movement for insurance is on cards. Deepu, your thoughts on technology playing the role and Bima Sugam playing the role. And of course we have Bima Vistar, Bima Vahak. It's not that one thing that the regulator is doing. I think of late, hats off, big round of hands to ma'am and sir for bringing that kind of changes, last 2 years. Really helpful for the industry. So what are your expectations from Bima Sugam? How will life change for people sitting out here?
See, I think, the regulator, as I mentioned, has been extremely proactive, in terms of working with the industry to make life simple for the customer. That is the ultimate objective, right? So if you look at, Bima Sugam, if you look at Bima Vistar, if you look at Bima Vahak, right? Across all these three, we're covering the platform, we're covering the product, and we're covering the distribution model, right? And we've always seen in the last few years that it's about platformification, right? But for anything, you go to platforms. If it is shopping, whether it's even hospitality industry, right? You basically go to platforms. So from that perspective, when this platform comes in, aided by, the product and the distribution angles, it is definitely going to make it easier for customers to understand, because one is everybody is converging on the same platform, and the other is communication as well. And I think one thing we need to keep in mind in the Indian context is the communication has got to be multilingual, because customers, the days of only, communicating in one language, don't...
It's a vast country.
Exactly. So I think from that perspective, definitely a step forward. And we all have been working, in very close coordination with the regulator through various committees. There are a lot of committees, right? What you see is only the, the names of the three platforms, right? But there's a lot of work going on behind it. There are a lot of committees, which is the regulator and the industry, and sometimes they work with partners in terms of figuring out standards which apply across the entire industry, getting products up to spec, and making sure that we are all, working in tandem. So definitely it's going to be a, like you said, a game-changing moment for the industry, and we're all very excited, and we look forward to it. And coincidentally, IRDA also has this vision, right, that insurance for all by 2047. So therefore, I think we're all set on that path.
I'm so glad, and I think hats off to all of you in the industry, the way, the changes are getting imbibed, the new regulations are coming up, they are getting endeared. One question that still comes to my mind, and every possible forum, every possible opportunity I talk about it. The industry is not perceived to be a real cool industry. And when I say that, this industry needs a lot of people based on the brains. If you have to actually, create innovation, create new things, you need brains. You need people coming out of IIT trying to join insurance as a profession. So how do you bring in that coolness, Priya? Any thoughts on making the industry smart? And Deepu, subsequently, and Rajiv, all of you, it's almost like a rapid fire round for all of you. How do you get glamour to the industry so that, people line up? I recall during my time, and I love telling stories, blame me for that. But during my time, when I become, like sir, I become a director recruit officer of LIC of India. And you would actually not believe that my wife used to be embarrassed because everywhere we'll go, where does the husband work? So LIC. Acha agent hai kya? So no. Development officer? No. Then what does he do? Kind of a thing. It was really difficult to make people understand that we work for living and in the industry, right? From there to now, not much has changed. 30 years, I think I am married close to about 30 years now. Okay, 25 crossed, definitely very close. But I don't see really glamour getting added to the industry. So how do we create something, by which this becomes a cool industry, people line up, sign up, and like Amitabh Bachchan endorsing kind of a movement. I don't know. Any thoughts?
So interesting question, and one really wonders that as IITs and IIMs, as people graduate, and I belong to one, as you know.
Yeah.
So this doesn't come like a natural choice.
Yeah.
Right, and I would always
go for investment banking.
Yeah, investment banking, M&A, and this, that, and all the other jazz. So, quite frankly, it is a matter to ponder. And I was fortunate to build a insurance. I was attached in my previous company with a university, and we built a program for insurance. Especially with Manipal, curated completely for all classes of insurance, and one of the divisions was health insurance, and we really got them as part of their other curriculum, awareness around insurance, why financial literacy is important, why insurance is important, what role it plays. And I remember traveling over weekends, to Bangalore and Manipal, and really delivering those sessions and getting a couple of you guys to also travel and do that engagement. But, on a serious note, apart from those initiatives, NIC, and all the other efforts that are going on, I can talk about ICICI Lombard does a lot of intervention or programs around, IIT Bombay, Keynote Institute, and multiple other innovation labs, where we invest on data analytics, a lot of digital science, data science practices, where we get these, brains really excited on how can you solve the customer problem.
Exactly.
Right? And, most complex to explain, most complex to sell, most complex to really have build trust, and, a lot of digital innovation. Yeah, boring as well at times. I've never found insurance to be boring, but that may be only me. So we really have to get these people energized to solve the customer problems. Now we're talking about, the digital platforms, whether it is Amazon, whether it is all the other new platforms. What have they done? They've really solved that one simple problem, which is real in the face of the customer, and really sorted it through logistics management and other kind of, smart solutions. We have many problems in insurance which could be solved. And I think that ecosystem of a startup, entrepreneurial, bids is what we need to look at. And we are doing our bit, and, many others, the peers are also doing a lot of effort. And soon we're seeing, a lot of changes happening on that side. And you'll run out of this story soon, is what I believe, in years to come. Deepu, you want to add?
Deepu,
Yeah,
any
so
addition?
I have a slightly different take. I don't think we should worry about, proving a point, right? We work in a very noble industry. We help people rebuild lives, right? So, for example, if you go back to the J&K floods of 2014, I went to Kashmir once, to go to our office, and the cab driver got talking, and he said, "Where do you work?" I said, "I work in Bajaj Allianz." And he said, "You don't know the kind of respect we have in our hearts for you, because you paid us faster than anybody else did. And, every day internal metric was not how many claims you rejected, but how many you paid." So we work
Claps for that.
We work with the customer, and you can see a YouTube video, no actors, no Shah Rukh Khans, actual customers whose lives were rebuilt. So
Wow.
we work in a noble industry, right? Because we're not selling harmful products.
Exactly.
That's one. The second is, I think we also need to, create awareness. So for example, I said the combined ratio is 120. 120 means it's one industry which is spending more than it's earning. And the biggest component is claims, right? So whether it's motor claims, whether it's, health claims. Do you know the hospitals, the entire industry pays 1 lakh crores a year, right? These are numbers which we need to go and help
Yeah, we
people.
just got the numbers from Mr.
Right? So
Patnaik
that's another angle, right? And the third thing is, if you look at a lot of angles, right? I mean, I remember I was in a conference some years ago, and then there was this talk, to insurers lag banks, and I said, "You're talking about blockchain? We have already deployed blockchain."
Wow.
Right? So I think it's about having pride in your profession, because if you do not have the courage of conviction, you'll always end up trying to please others, right? Of course, we need to communicate, but I think more importantly, the industry needs to have that conviction.
Thank you for making that up. Rajiv, any comments on that, and also on the point that I recall regulator's office also used to run hackathons, right? And I think that's a great initiative to include new minds into solving problem, like Priya said, looking at it differently. So any thoughts on use of InsurTech? Do you see enough happening, value changing, journeys changing, or some new ideas coming up?
So I think if you really ask me, talent pool in this country is big. IIT, IIMs is just one small portion of the entire talent pool. If you really ask Yashish, who started Policy Bazaar, he once told me he never had a single insurance guy to start this company. He brought people from different sales organizations because he didn't want a mindset, to start this organization. So I'm not saying IIT, IIMs are not important. I think it's a mix of intellectual talent who will be there to produce, what you want them to produce, both in terms of right products, right technology, right ease of doing business. But at the same time, you also need people who will be able to help you to reach out to the segments and tell them why insurance is there. Now, if you take Patnaik sir's statement, he said we will be able to create 1 crore jobs. And I tend to agree there, because on one side, we are talking about lack of employment. On the other side, the industry is crying about lack of availability of talent.
Great point.
Now, look at the irony here. The irony is a lot of graduates pass out every year from tier 2, tier 3 cities. We've been talking about tier 2, tier 3 cities, and don't know what to do after that, right? So if you go back to these colleges and say, can we run a co-curriculum? Because if you look at insurance industry alone, I was in SBI Life for a decade, and I remember we used to struggle finding the development officers, and we used to find people who will come and the same guys will go somewhere else,
Yeah.
And that continues to be a problem even today. Even when we run an insurtech company, our attrition rates are as high as 80-90%. Now that means the same people are floating around in the population, and we are not creating new talent. So I was with the, in the Committee of Regulatory Reforms. We met Mr. Somasundaram Ajay said the other day. I was saying that we also need to now work with the government to create the talent pool, by partnering with government and creating skilled workforce from this tier 2, tier 3 surround. Now imagine if you go to Karnal and tell the university there you have 500 graduates coming out. If those people who are interested, why don't we run an 8-week program? And that 8-week program can be co-designed by the company and the university. And once you pass out, 90% people become employable from 0%.
Sure.
Now, if you can create that across the country, I think the availability of skilled manpower is very good. And trust me, a lot of people who come from rural villages are doing exceedingly well, in fact, much better than their counterparts in the cities. So I think talent is there everywhere. College, name of institution is just a tag. I think you can get intellectual talent even from a non-IIT, doing what an IIT does. So I think you need a mix of talent. I think in this country, there is enough talent available if we can work together to produce that.
Thank you so much, Rajiv. Thank you so much, Deepu. Thank you so much, Priya. I think with such learned people, I can go on and on and on. And I can also add some more stories all the time, but we have other panels and we have other speakers coming. Thank you very much, audience. You know, it was lovely talking to all of you with some of the points that I got on LinkedIn. And thanks, Bombay Chamber of Commerce, for organizing this.
Thanks, Amit. It's always a pleasure.
Hello. Thank you so much, everyone, for that insightful discussion. I request our Director General, Mr. Sandeep Khosla, to present mementos to our panelists as a token of appreciation.
Can we have a group photograph before that? Yeah, you clap while actually
Mr. K.V. Deepu.
To the lady first. Give a DNI award also.
Okay, Miss Priya Deshmukh.
I'm sorry, sorry.
No, not at all. It's the right thing to do.
Mr. K.V. Deepu. Mr. Rajiv Gupta. And our moderator for the day, Mr. Amit Roy. Thank you so much, everyone. Let's have a break for tea. I request you all to kindly join us back in 10 minutes for our next session.